That's right. Well, now we are. Well, good morning, good day, everyone. Well, thank you for joining our LinkedIn live event. This time that we in such a short notice and get everybody together, and because that we know this is a very important subject, a lot of people has been asking us about the SEC, Security Exchange Commission's latest regulatory framework on requirement on cybersecurity. And now, of course, we know this is a very serious time and wrapping around different things globally, and lots of different type of risk has been discuss in our industry. And that is why we invited an expert from SEC, former SEC prosecutor, and JP Wilson. And Mr. Wilson on board with us to share his experience. So Sean is going to let us know more, make an introduction for me. As you know, I can't even talk this morning. So Sean, please take it away.
Yeah, today we're joined by JP Wilson. He's CEO of GCRA Corp, a boutique cyber risk management firm based out of New York. JP is a former staff attorney for the SEC Division of Enforcement. Is that correct, JP? I got that right?
Yes, sir.
And
Yes, sir.
he's here to talk to us today. He's also been in-house counsel for several different firms. And so he's coming from a perspective that really is the front lines of enforcing these SEC rules for organizations. And he can speak to the C-suite and boards. He knows how to do that, having been in-house counsel to address regulatory compliance issues for them. So the SEC cyber rules really sort of changed the landscape, JP. So why don't you give us some background of how this came about and what it means going forward?
Sure. Good morning, good afternoon, and I think we have some people from the Far East on the phone. So good
I was
evening.
going to tell you that, yes, we have people around the world.
So good evening, everyone. Good morning, good afternoon, and good evening, where it's applicable. My name is JP Wilson, as I was just so nicely introduced by Sean Mahoney of NetSwitch and Stanley Lee of NetSwitch. My bona fides, I'm not puffing my chest, but I think they had me talk about this because we're at the nascent stage of the effectiveness of this new SEC cyber rule. It's supposed to go into effect. It got announced late July of this year. It's supposed to go into effect in mid-December, although there's some things that kick off mid last month. So it's a rolling effective date. But I think the Division of Enforcement, where I used to work, and I'm going to date myself, but in the late 1980s, and as Sean indicated, I was on Wall Street 25 plus years, senior in-house legal and compliance. So I straddle the fence between between the regulator for the financial services industry, but non-bank, and in-house counsel. And I have dealt with small to medium-sized enterprises that are 175 to 150 million annual revenue. I've dealt with small to medium-sized businesses when I was general counsel and chief of compliance at a small broker-dealer. So their annual revenue was between 15 and, let's say, 30 to 40 million. And I admittedly, and I say this with love and respect, don't speak cyber geek, but I do speak board. But that's the reason why
you got to leave some room for us.
Yes,
You got to let
exactly.
us
That's
talk,
why
right?
I have become and I'm also at the nation stage of becoming the business partners of NetSwitch. So that sets the table. Let me then continue and explain where this came, what's the broad overview, where it came from, what are the possible origin, what are the practical implications, and is this a hopeless situation, or are
And
there?
most importantly, what our audience can take away from your
Yes. What are the
experience
prompt?
and our partnership. Yep.
Yeah. What are the prompt next steps? And so I preface my remarks by saying, although I'm the CEO of a boutique global cyber risk management consulting firm, consultancy, with business partners in London and Vancouver, maybe Asia Pac in next year, I'm going to speak to you in plain English, i.e., no legal jargon. And it will sound as if I'm an umbrella salesman saying to everybody it's about to rain, but I really want this to be not a pitch. I want you to come back to us if you have any questions. My email is jpwilson@gcracorp.com. And you all know Stanley and Sean's email address.
Yeah, we'll
So
post
Yeah,
let's
the
start.
because it's
email
such a
addresses in
short
the
note. Yeah,
comments later.
Yeah, let's just start.
exactly. We're gonna post
So,
this recording as well for our audience to share,
yep.
because it is a very important subject, and especially that JP, that we know that you're coming from the legal background, and our audience in the compliance technologists and business leaders, that they actually might need to send this out to their legal counsel to hear what you're about to offer to us.
Well, that's a very good point, Stanley. And that's the kind of internal consultation and interaction that not only do we want to have happen after this presentation and once it's thrown up on YouTube for rebroadcast, but I believe coming from the commission, from the United States Securities and Exchange Commission, that this is precisely what this new regulatory mandate is designed to foster. Is this delegation and then letting go of the rope, but actually having a board-led committee that will actually accomplish the two following objectives and goals, which is protecting the enterprise and protecting the board and guarding and shielding them from any potential regulatory risk exposure under this new mandate. So here's the broad overview of the new cybersecurity related regulation that was announced, and that goes into effect, as I said, in mid-December, that is applicable to boards of directors of public companies, including foreign private issuers, that are registered with the United States Securities and Exchange Commissions. And as I will note, we think private companies also that are privately held, hedge funds.
Give us some example in the industry, because like, is it wealth management, banks, global banks?
No.
Okay.
The public company, and so I'm sorry, let me just finish my thought there for a second. We believe, as I will note, that private funds and other privately held companies, hedge funds, private equity firms, etc., should also pay closely attention, because you should be hearing the regulatory train whistle coming around the bend. In other words, it's coming to your town, so you should get dressed. In other words, don't say, oh, well, you only made this for the mandate is only directed to public companies. I'm private, and therefore, nope, you're a registrant as well under the 1940 Acts, be it a mutual fund company or a private fund, as I just described. This is not directed, this mandate is not directed. So thank you, Stanley. That's a very good point. It is not directed only to financial firms. It is regardless of industry vertical. It is any publicly held, is applicable to any publicly held company and foreign issuers also of stock, because in order to have your securities traded, you must be a registrant of the SEC and file annual reports on Form 10K, quarterly reports on Form 10Q, and material disclosures and notice of, among other things, a hack, data breach, ransomware, cyber attack, other incident, you must file that on a Form 8K. So it is a broad brush regulatory mandate that applies to basically everybody, unless you're privately held. And as I just indicated, you should start taking note and getting yourself ahead of the game, because you also are possibly registrants of the SEC, and that's where they establish their jurisdiction. It was designed to both enhance and standardize cyber risk management from a corporate governance perspective, including the now 4 business day window requirement to report on a timely basis material incidents. But I want to make clear that although that seems to be the focus, the timely disclosure to fall in line with the European Union's GDPR, General Data Protection Regulation, there they have it within 72 hours. So this is trying to keep up with the EU. The new cybersecurity risk management, strategy, governance, and incident disclosure by public companies is really focused on expanding and increasing the corporate governance duties and responsibilities of boards. Having untimely reports of material hacks, although we can have a discussion offline about whether any hack is not important to any investor or cyber insurance company or other stakeholder like a regulator.
Now you sounded like geek to me, so let me stop you for a second.
Well, no.
Just one couple question. You mentioned about incident response. What this, of course, to me as a technologist, to a technology geek like me, I know what the incident is: security incident. The alerts coming from all types of solutions out there. What is your interpretation of incident response from the legal side?
The regulatory requirement, the new regulatory requirement for the 4 business day reporting, only directs itself towards incidents. So that would be ransomware, data breaches, cyber attacks. The incident response would then be part and parcel with the new and developing and flexible corporate governance duties of boards. Meaning, in the past, there was a dividing line between corporate governance of boards and the actual enterprise's response to a data breach, cyber attack, ransomware, or other incident. When I say incident, it could mean even, Stanley and Sean, where a hacker burrows in and then just sits there 3, 6, 9 months and just watches traffic go back and forth to know when to strike. That would be an incident. The question is whether that would be material enough to disclose. I think that there's going to be a discussion internally with compliance and legal, as well as with outside counsel, giving good advice, guidance, and general support to the board of directors, as well as the C-suite executives, as to whether a disclosure should be made. You don't want to prophylactically make a disclosure because that's going to hurt your reputation. So you have to be very careful. But
so for a lot of our customers from the past and even current, that I would say 80-90% of them, I don't know what that means when they telling us, what are you talking about, the hackers being in our network already or in our system? I don't know. How are you going to put that on me when I don't know what I don't know?
The question, Stanley, is not what you don't know, it's what you should know.
Well, if my audience had known, I'm a nagger. I've been nagging this for the last 20 years, and I just want somebody like you to validate why my nagging is a right thing to do.
The wonderful thing, Stanley, is you don't need me to validate. The SEC has now validated. The SEC understands and is manifesting that understanding through the cyber risk management strategy, governance, and incident disclosure by public company rule. The shorthand of that will be the new cyber rule. They understand that there was a need for such a rule, even though a lot of industry organizations fought tooth and nail to prevent this kind of what they deemed aggressive intrusion, and not letting them deal with it. Here is the main raison d'etre. This is the main reason why the commission issued it, because they want greater transparency and accountability on such an incredibly important challenge.
So my
Yeah. So
possible deniability doesn't work anymore. That's what you're saying.
What's that?
My possible deniability, I don't know, that doesn't work anymore.
Well, it's going to be judged with the usual anticipated 2020 hindsight in an enforcement investigation and potential action by somebody who used to be me. And
No wonder you don't want to turn on your camera now.
correct. I'm sorry, everyone. My camera is broken. I haven't had a chance to fix it.
Yeah.
whatever.
But thank you for the ribbing, guys. But getting back to being serious for a moment, it's an excellent point, Stanley. You and I individually may have been screaming from the mountaintops, this proactive is necessary. The SEC now has brought that forward to the doorstep of the board, so that until there are a handful of initial enforcement actions that give shape to what the SEC interprets is violative conduct, basically boards should take everything that walks in front of it as a potential snake and viper that might bite it and kill it. And
Yes.
as we were preparing, Sean and I mentioned to Sean that one of the powers that the commission has is that it can bar, either for a temporary period of time or totally, somebody from being an officer or board member of a public company. That's quite serious.
That's a big thing. That's a big change.
Serious.
Yeah. Hey, JP, now that
Yes,
the SEC has delivered the proverbial dead bird at the door from the cat,
I think it's more the horse's head in the bed, but go ahead.
So who should the boards be talking to first? Should they be calling in the CISO, the CIO, the IT team?
Well, you jumped ahead of me, but the short answer to your question is, and again, it sounds like I'm an umbrella salesman telling you it's about to downpour. But in order to be effective and efficient, you need a subject matter expert consultant. You don't have to do GCRA. You can go to anybody else. We happen to think that we're spot on, but anybody else. In order to provide the advice and guidance and general support to answer your question, Sean, where should we start? How do we comprise the committees that are being required? Mm-hmm. What kind of information do we as a board need in order to delegate, again, efficiently and effectively, to ensure or make sure that there's de minimis, minimization of potential regulatory risk exposure to us and also to the company. Now, here's an interesting observation, and then I'll get back to run through in case this does get replayed by general counsels or heads of legal or heads of compliance or chief information security officers or board members or C-suite executives. There's something for everybody to understand. Although this might sound like a huge leap for the SEC, and for some firms, I'm afraid, gentlemen, that's the case, that they've been stuck in 2015, 2016, really haven't made that much progress since the 2014 Target and Chase Bank hacks. You the commission should or is expecting you to have kept pace with increasingly sophisticated hackers. You'll never catch up with them. That's impossible. If you have 14-year-olds hacking into NORAD on a bet, the likelihood that your CISO and staff are going to try to keep pace with hackers, be they coordinated or uncoordinated, state agent proxies or not state agent proxies, is relatively slim. However, the game has changed. We know financial services and other agribusiness, oil and gas, energy, all of this makes up infrastructure. It has been said for many years that the next war is not going to be nuclear or boots on the ground. It's going to be cyber, which will disable a lot of the military armaments that are being deployed or can be deployed in the future. If you are brought to your knees, you may cause a run on the proverbial bank, meaning it may be another 2007-8 bad mortgage crisis. The problem is that there will not be enough money to print. There will not be another TARP 2, and if they try to have a TARP 2 and print enough money, it'll drive the value of the dollar through the floor. So the SEC, I can assure you of this, ladies and gentlemen, is, as of the effective date, hunting for a poster child enforcement case. I can pretty much assure, I can't guarantee, nothing is for certain, but I'm sure that when that hourglass gets turned upside down and the sand starts dropping, Chairman Gensler has told the head of the divisional director of the Division of Enforcement, find me a test case where somebody was so lax, so behind the curve, and so irresponsible that no matter what the industry is, no matter what the vertical is, most people think the SEC is only responsible for brokers and dealers and mutual funds and hedge funds and private equity firms. But because it applies to all public companies that must be registrants, because their securities are publicly held, retail investors, institutional investors, they now have jurisdiction over everybody, and you can't escape that.
So that leads it to a couple questions that I have been hearing. It's like, well, my company or my firm, my organization already complying to other regulatory issue like FINRA, or some of our client in Hong Kong, I'm already compliant to HKMA, Hong Kong Monetary Authority, or various type of local or regional regulatory and compliance requirement. One question is, well, now what do I need to do with the SEC? Am I going to continue to do the similar type of thing? Now, what are the discrepancy? You talk about risk mitigations or risk management. What is the difference between risk and compliance or regulatory regulations? And then the other part of it, like I said, also, I'm in different part of the world. For our global audience, do I really need to care? Or if they need to take action in that direction, what would be your recommendation to mitigate that risk?
Sure. Let me start from the cosmos and then come down to earth on that to answer that question.
Wonderful.
If we start with a broad view, then a number of considerations have to be made. Number one, each company has both internal and external constituencies. External investors, retail and or institutional, regulators, cyber insurance companies that provide you coverage, counterparties if you're dealing with securities trading, or counterparties or contrasides if you're in a mergers and acquisitions deal, or you're dealing with an initial public offering or secondary offering, or you're dealing with a counterparty in a contract to provide products and or services. Internal constituencies, the most important would be the board of directors. Second would be the C-suite executives that they've delegated day-to-day operations to. And then third would be the department heads to whom the C-suite executives have delegated each individual area. Chief Information Security Officer, Chief Compliance Officer, General Counsel, Chief Risk Officer, head of IT, etc. Chief Information Officer. So there are internal and external constituencies that have to be made happy and to know what their duties and responsibilities are in order to protect the level above them and all the other levels above them properly and on a timely basis. Coming down from that cosmos on high perspective, before we hit terra firma, one has to understand that the SEC's new rule will most likely be copied in some form or another by all the regulators, particularly because the United States is the money center of the world. And so HK, Singapore, Australia, New Zealand, Seoul, Tokyo, all of Western Europe, and Canada will mimic this because you're dealing with often with international companies. And now let's hit terra firma. What does that mean? Really, you should race to the top. If you try to race at the bottom and try to get away with as little as possible, you're only going to hurt yourself. You will pay the piper at some point. If you race to the top, however, it's a win-win-win. Win for external constituency, win for internal constituencies, and win as a proper corporate citizen that is really understanding how important reputation is and how quickly that can evaporate and how quickly your value, both private and or public, can sink very, very fast. And it may not be able to be recovered. If it sinks, I think, Sean, you will agree that class action plaintiffs bar will suddenly show up and you'll be in depositions for the next decade.
That's true. And relative to valuations, you were pointing out, we had a recent incident with a publicly traded company, and they lost $2 billion in one day in market cap.
How quickly did that get recovered, or has it not recovered yet?
It probably started to recover a little bit yesterday, but still, that $2 billion market cap evaporation is pretty quick within one trading day, and that's even before regulators are starting to take a look at the company as well.
Sure. So can I posit, Sean, that incident may have been prompted by a black hat being hired by a short seller?
Good point.
Is that possible?
Certainly possible.
Is the concept of front running and trading ahead, particularly on the buy side, also a distinct possibility?
And that was a question we had from the group: is what's the likelihood that a hedge fund sues a firm because stocks take a major dip during an options expiration period?
Oh yes, that can absolutely be one of the fallouts, and something that you and I were speaking about. Yes, I hope that answers the question. I hope if the person needs to further, but I think, Sean, when we were prepping yesterday, one of the things that we discovered as of late is that not only does ransomware it now falls into one of three buckets. Either they steal your information, encrypt it, and only give it back when you pay the ransom, which may violate criminal law. I think the FBI and Secret Service and / Treasury have been trying to dissuade people from doing that. Okay, but you need your stuff back. If you have copied everything and put it into a data farm and it's encrypted, they may block it. They may block access, or they may throw it up on the dark web. Now, if you're a law firm and or a CPA, you're going to get fired pretty darn quick. And third, they may, which is much to my surprise, but it's only logical. I think you said to me, Sean, yesterday that now there's triple or at least double extortion because now they're threatening to go to the European Union and complain, I hacked, therefore it wasn't kept properly, insecure, therefore there's a GDPR violation, so go bang their heads.
Yep. And here's all the proof.
And I'm telling you because I have the stuff.
Okay.
So you're getting it from the horse's mouth. So if you race to the top now, then you can't lose. You will not lose. Why? And this is incredibly important to understand. The better you protect yourself, all that you have blood, sweat, and tears move from an SMB to an SME, or even to a large from an SME. Your cyber insurance carrier will be happier and may be inclined because you lower their future claims risk. And so there will be an argument made possibly by a broker of yours, if you deal with a broker and not directly, to demand that you pay less premium in the future because you don't pose as much of a future claims risk as you did in the past. And then lastly, you will make your regulator happy by not being the possible source of a total collapse of one sector of the infrastructure of any major society or any minor society. Just a quick war story. This is how serious the SEC is getting. There was a law firm, top 30 in the United States, generating small number of billions in billables annually, based here in the States. They got hacked along with 4 or 5 other peers in June of 2020 by a Chinese group. The SEC came wandering in only this past summer, and the enforcement division said to the law firm, "You got hacked." Yes, we disclosed it. Okay, which of your public companies had information stolen? Well, we can't tell you that. That's attorney-client privilege. No, we really need to know in order to determine whether they disclosed their hack of their information on a timely basis. We'd love to help you, but as we learned the first day in law school, and I'm very serious, attorney-client privilege, the person who holds that is the client, not the attorney. And if the attorney waives, discloses, or otherwise violates that privilege, they may lose their license to practice law. That's very, very serious. But on the business side, and we're doing an event probably next month or early December that's directed at law firms, they will start losing business because their clients will say, "I can't trust you anymore, holding our secrets, holding our privileged information. Therefore, I have to fire you."
And I think that you also touch on a point that on top of that, you mentioned a couple of times about cyber insurance, which is a subject that near and dear to our heart. Sean and I talked about it for quite some time about cyber insurance as the last line of defense, but now it turned around 180 becomes, kind of like the first line of defense if you can even have an insurance policy, because now the insurance industry had learned, hey, there's a big gap in between what you said that you did to what we wanted you to do. That ties on into what you just talked about, the law firms. Hey, back then they may have insurance that back them up, can continue to operate if that disclosure happened, but couple things. One, the insurance now come back say no, you're not insured anymore because you already know what had happened, but you didn't do anything about it, and then tied it back into the SEC. Now, like you said, put it up on front. It's like, hey, you should have done that now, just like the insurance company. And if you don't do all these things that the insurance or the SEC asks you to do, you continue to ignore it, you're going to be taking on your own risk. Nobody want to touch your company. Nobody want to touch your firm. So that last line of defense is completely gone. So
Correct.
that's my interpretation.
Correct.
Yeah,
Correct.
please share your thoughts.
So if you don't race to the top and you take the risk, you say you're too small to get hacked, you say nobody cares about you. Yes, I agree with you, Sean. It used to be, the phrase used to be, it's not a question of if you've been hacked, but when. My argument is, and I apologize for my language, but I'm from New York, crap. You're being hacked right now.
Yeah,
And
that
you
was
don't
the
even
position
know it.
I had when I was running.
You don't
another
even know it because your defenses are so replete, are so insufficient that you have no idea. And if the Ponyman Institute in the last study indicates that from cradle to grave, all in total cost per data breach, probably for an enterprise, not an SMB, for an enterprise, is $4.5 million USD. Sean, Stanley, what's the likelihood that a company has only been hacked once a year?
They already been hacked. I mean,
non-existent. It's just non-existent.
Go back into how Sean turned you
Yeah.
into a geek, the triple extortion ransomware.
No.
There is a term for it for a reason. And why there is such a term is because we keep saying that, the 0-day exploitation. Yes, I am a geek. Okay. So that 0-day exploitation is already in there. It's like most of the IT team is say, oh, you got to do vulnerability scanning. My goodness, that is so, like you said, 5 years, 10 years ago. We don't even do that, anymore because it is not effective anymore. So, yeah, it's already happening, but they just don't know it.
Here's really where the bottom line, I think, comes in. You're a business, SMB, SME. You want to live for another day, correct? I'm asking this to the virtual board, okay?
Yep.
And then the answer is, don't be silly, Mr. Wilson. Of course, that's why we're in business.
Yeah.
Do you want to enjoy sustained future business growth in the future?
Absolutely.
Again, Mr. Wilson, that's a silly question. You, in this day and age, will not be able to achieve that unless you adequately protect yourself. And the cyber insurance will give you short-term cash, but here's the primary concern. How quickly can you get back up and running if you have a 0-day, an end of days attack?
Yeah.
It has gotten so bad that a retired lawyer from a prominent law firm got accused criminally for hiring a black hat. It's unbelievable. So the point that I'm trying to make, I think, hopefully successfully, is that there's nothing that will show the emperor has no clothes quicker than a hack.
That's right.
And more devastating than a hack. It can literally destroy an M&A transaction. Let me bring you back to the 2016 Verizon acquisition of certain accounts of Yahoo that cost in total $400 million extra. It will kill an IPO or secondary. It will tarnish reputation that it may take forever to come back from. The $2 billion market loss, I can assure you that class actions are filed within 48 hours. I can literally assure you of that. But lastly, if the hierarchy is protection, cyber insurance for short-term cash needs, building up a reputation to live for another day and enjoy sustained future business growth, then I think the question that Stanley, you and Sean might have is, all right, what are the immediate next steps? How do we start to assure ourselves, make sure that we have adequate and sufficient protections in place? We know.
Well, that would be too geeky, JP.
No, because
I'm serious. A lot of people don't want to hear us because it's, oh, you guys are geeks. You always come up with like different solutions you want us to buy.
Except the day has changed. Except the day has changed because of this new rule.
Okay, now what I'm trying to get to also the discussion in EU that I'm having and we are having is, in a year or two, this is going to be personally liable to the board and to the C-suite.
Not in a year or two, in 1 or 2 months.
Right. And this is what we talk about now from the technologist point of view. Oh, finally, it's not just us carrying all the burdens, 7x24s, the unsung heroes, sitting in the SOC and analyzing every single bit and byte. Now the top needs to take responsibility than liability. But the top and I hate to use this because I've been using this for the last 11, 12 years. The vicious cycle of self-destruction. It's been going for far too long. Finally, now there's a regulatory issue pushing the top because now they become personally liable. But we still think this is a
Wait,
journey.
Stanley. They may be personally liable unless their E&O or D&O policy covers them. But
Well,
sometimes those E&O, D&O policies do not cover regulatory violations. Just FYI.
and also I was leading into that. Now between the two, there are a lot of people involved in the middle and the third party, fourth party, and Sean has a case study talked about now into the eighth and ninth party is going into that deep on the
Yes.
supply chain process.
Yes.
Now, state attacks, it's happening on a daily basis. What if that, hey, the upper management, this is where I'm doing the best I can, following the advice of all the consultants and, the SEC regulations, we're following the best practice, but we still got hacked. And now the insurance companies say, no, we're not going to pay you because it's a state attack. How do you answer to that question? It's like, why am I buying insurance for? Why am I doing all this IT for?
Because you don't know the source of the hack until it happens. So anything other than a state agent or state agent proxy will be covered. And not having cyber insurance, it's an interesting point. I have heard, and there are some people that are making this point. It's very important to understand this. Not having cyber insurance could be could be deemed by the SEC to be a per se violation of this new SEC cyber rule. In other words, in the parlance of my old days as an enforcement staff attorney, it's a dead bang. It would be like not having E&O, D&O, keyman, slip and fall, fire, water, flood. You're just not a responsible corporate citizen if you don't have it. The point that I want to make, because we're running out of time, we'll make some last minute remarks, but the point that I want to make is the days of, and I think this was the Chairman Gensler's objective, the days of trying to inadvertently have a false sense of quote unquote, of parenthesis, cybersecurity are over. You only will beg for a regulatory investigation. You only will beg for class action plaintiffs bars filing against you post stock dip, post data breach stock dip. You only will buy yourself pain if you don't race to the top. Now, the question that I always get is, well, Mr. Wilson, we're not a cybersecurity company. We sell tires. We sell bank. We're a bank. We sell agribusiness, oil and gas. When is the limit? I take it you want me to open the enterprise's checkbook to protect the board and the enterprise. But where do we know when to stop? And the answer is, like a typical lawyer, it depends. It depends on where you are right now. And so if you don't have an assessment and a pen test that gives you a pulse check that is in addition to the representations, the self-attestation representations that you make on a new or renewing cyber policy, and that cyber insurance carrier will do their own risk analysis of how much you pose in terms of claims in the future. But if you don't, for your own sake, understand the need, and now it's being demanded of you as a board, you can't delegate this away and then let go of the rope.
Right.
You must know in order to avoid the specter of having inadvertently, all the way to the other end, intentionally, a false sense of cybersecurity. You're going to get hurt. even if you put aside, even if you said forget the regulations, forget the insurance companies, come back to, don't you want to live for another day with sustained future business growth?
And I think
Yeah.
one of the part that is more important, even though I'm a technologist myself, it's than technology, is the processes that demonstrating the organization is willing to move towards that direction. As I keep saying from many years, they are actually, you don't have to buy another tool. You already have a lot of tools in your organization. It's just how you taking the data out of it to prove and to improve the process. And we have done that for clients. Don't need to have a new tool, but just basically improving the process to demonstrate to meeting the GRC requirement, governance, risk, and compliance, whatever that is being defined by the C-suite and the board of directors, that trickles down to the
Sure.
organizations. So I think it's a lot to do, we believe, is the communications that leads to collaborations, and is the process. Look at what they existingly have and how to improve that process, how to increase as basic as educations, having a lunch meeting to talk about cybersecurity awareness. There are many things that it doesn't cost the organization a whole lot of money to improve that best practice.
But let me do you one better. I agree with you, but let me do you one better. Before, the board could delegate and then afford to not pay as much attention,
That's right.
outrightly ignore somewhere in the middle. Now they can't. So when boards go home and have dinner, they not only should be worrying about hitting their quarterly numbers to satisfy the return on investment expected by their institutions, but they should also be worrying about the cyber risk exposure for their company.
It's now a fiduciary
now part.
responsibility.
Yeah, it is part. It is now part of the fiduciary responsibility. It's always been part of business.
Right.
So if you consider what Stanley just said, and I agree with him wholeheartedly, and if I got that statement relayed through outside counsel in an investigation, I would be more comforted, and I would maybe look for another victim, because I would say this company is in shark-infested waters like everybody is, but they've decided to dress in black or dark navy. I'm going for the idiots that are jumping around in yellow and orange, because they're the ones who are going to get cut in half, and they could cause a run on the bank. So this is a much larger, box top of a puzzle. But let me just confirm what Stanley just said, and what my cyber risk management consultancy, we're just tools in a toolbox.
Right.
And indeed, if you think of using cyber as an ability to, also as a tool, in order to better yourself, you now have an incentive. If you're a board member, you have a real incentive. You should have had it before, but now you really have to embrace this. The other thing that we wanted to mention is that it should dawn on people that overall, in strengthening overall cyber and including third-party risk management to cover the tens, hundreds, maybe thousands, depending on how big you are, mission-critical secondary and tertiary third parties, supply chain vendors and service providers. You are responsible for those. So if your law firm, has a breach, or your CPA or some other third party, the SEC may seek from you information to assure itself that you assure yourself that they were current and had effective, efficient policies. Again, you're not going to block everything, but you can't be stuck in 2016. So
Well, but JP, on top of what you just said, that third party, I have this global consulting firm doing everything from, consulting policies and procedures to IT, auditing and executions. Hey, I'm safe, right?
The word safe, the word safe and cyber should never be said in the same sentence. You
Well,
can
but I
never
got this
be
big
totally
company, the
safe.
big consulting, global consulting, we're paying hundreds of thousands, if not millions of dollars every year. Why should I worry? I got it covered. Besides, I can pay the insurance. Why should I worry?
Well, because it's a brave new world. Not to quote from Alex, Huxley, but it's a brave new world, and so it might prove beneficial to have an independent pair of third eyes to make sure that what is done does not result in a garbage in, garbage out issue, does not result in a mistaken or an unappreciation of that cyber is an interdisciplinary challenge on a daily basis. This new rule is an ice bath, if you want to think of it that way. It's an ice bath that should have you step back and say, well, I think I'm doing everything, but am I doing everything? With the benefit of 2020 hindsight, will I get caught out? Will I become that poster child? Now, I guess what I'm trying to say as to next steps is don't back a tractor trailer of money and dump it. That's not going to help.
Well,
You
that's
think it's
what,
going to help. It's going to give you you may think it gives you peace of mind. What the commission is looking for is laser focused, effective and efficient actions. And the only place to start, guided by an SME, be it law firm, law firm partner that's particularly switched on, consultant, is to have a pulse check to see where you are at. These should be done annually, if not more frequently, depending on the risk that's facing your industry. If you're a bank, that should be done quarterly.
So are you saying that there's a possibility SCC is going to be repeating, I'm dating myself as well, during the Enron days and what happened to Accenture, I'm sorry,
I was
Arthur
part of Enron,
Anderson.
so I know the Enron days.
So there you go. That's why I'm saying that it's wow. I was going to be one of the bandwidth trader because of my experience and my background.
Mm-hmm.
So I was glad that the company that didn't go through that process, I was selected to be one of them. But anyway, that's besides the point.
Mm-hmm.
But that case that Arthur Anderson, we thought that, wow, this is a huge consulting firm doing everything up and up. They are right. And yeah, that's not a problem. They should be fine. We can trust every single thing to them. But what I'm trying to lead into is the experience from that I see the separation of duties. It's a lot more important than relying on a single entity and present it to them to the clients or the prospect that, hey, we can do it all because we have the financial muscles, because we have the manpower. And by the way, the manpower is a lot of them. It's just being, freshly graduate. Nothing wrong with that, but they
Correct.
don't even know what is left to write. We
Correct.
went through that a lot.
No, bodies and budget is not going to get past the commission now. It used to maybe, but right now it's lying at the foot of the board. The board should reasonably adopt the following posture. Everything that's walking in front of us could be a viper that bites us and kills us. End of story. Therefore, I must take a logical approach to determining where I'm at, because that will determine where I'm going. As I told Sean yesterday, you cannot manage what you don't measure. It is impossible. Now, Do you have to become a cybersecurity company to do that? No. Does my group, former peers of State Street Bank, Citi, Kroll, blah, 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 do we have the ability to guide you in conjunction with NetSwitch, among others, in our ecosystem? Yes. Because I came from the commission, enforcement division, I can pretty much feel how they're going to approach this. They're going to take out the most ridiculous example just to cut off their head and put it on a spike outside the gates of the city and say, not here. I hate to be that brutal, but that's how we think. Because we have a larger remit, Sean. The remit is now not protecting the bank only. The remit is to prevent the banking industry.
Right.
One last thing, because I know we're coming out of time. One last thing I want to share with everybody. I hope your hair is not already on fire, but if it is, I hope I'm not pouring gasoline or kerosene on it. A lot of current industry best practice, unfortunately, is stale. Not because the hackers' sophistication level is far and exceeds. It is. I personally think they're bored when they're just bored out of their gore, when they do their thing. But if you look at it, you could say, and I think you mentioned this earlier, Stanley, it was appropriate in 2016, 2017, but we're in 2023. So if you have not made and can evidence demonstrably year-on-year improvement, if you say to the SEC, well, we have Tenable for vulnerability patch management, they're going to go, great. So did my great-great-grandfather. What are you doing now that's better in order to adapt and be able to respond? Again, it's a cold bath, but we shouldn't have a Chicken Little reaction. There's a methodology that's logical, makes sense. Costs can be contained. You need remediation where you need remediation. You need to not only meet the minimum product requirements of cyber insurance, but maybe you need to go further because the other red flags that are picked up on the way may give indication that there's not one mouse in the country barn, but there are 50 in the wall.
And our purpose is elevate connaissance, as simple as that. We just want to bring everybody's awareness, including, the new people want to come into the industry, the future practitioners. And we want to make sure that, within the last minute, that we want to bring that awareness higher and
but I'll do you one better, Stanley. I'll do you one better because
I was leading into you're going to do another one.
No,
like
because
yep.
Because let me show you pre-new SEC cyber rule versus post. Pre, the board members would say, okay, let's just have enough information so we don't get ourselves into trouble.
Yep.
Right? And let me delegate. And if something messes up, we'll sacrifice the CISO at the altar and give the body to the regulators or to the pissed off institutional investors or whatever, right? You don't have that option anymore. They're coming for your head.
Right.
And if you think I'm exaggerating, okay, take the risk, take the chance. But you will sleep better, I can guarantee, with lower cyber insurance premiums paid, higher limits, greater understanding. You will embrace tone at the top. I'm not saying you have to be a geek. There are 3 things that all board members want. An explanation in 15 minutes in non-jargon, plain English, French, Swedish, whatever, right? And they would like to see a return on investment. Doing it the way, if you come, again, JP Wilson at JP
Don't worry. That's we will
CRA
something we
Corp.
will follow up. Of course, that please, we on top of the minute, on top of the hour, so we will post your informations in our LinkedIn group, and we'll follow with the the YouTube so that people can watch this and share this again. Thank you very much for everyone for joining. Thank you, JP. Really appreciate that you come and speak and with us, and I'm sure that we're gonna have a lot more questions from our audience to try to hunt
And
you
we may
down.
be able to send out a bullet takeaway, a half page or one pager takeaway. Thank
Great.
you
Will
all
do.
for
All
listening.
right.
Thanks,
Thank
JP.
you. All
Bye
right.
bye now.
Thanks,
Thanks.
everybody.
Bye bye. Bye bye.